Hello, sir. Myself Krishnamurthy, and today we will be presenting about the how to analyze the profit and loss statement of the company, and we will how to analyze analyze and performance of a company over its income statements, and we will represent the data uh, in the physical form using a Excel sheet and a Power BI. My teammates are Karthik G, Gautam, and Shashank D. Next slide. These are the overview of what we will be covering in the presentation. First one is a company's overview, which includes basically what the company does, where it is, what its name, and etc etc. And introduction is about the company's introduction, and which basically explains which sectors the company is investing, and what are the areas it is covering, and how big is the company, and or what is the importance of the company to the economy, and objective is why we chose this company and what are we going to do with the data of that company, and the expected outcome will be the uh, representation of a profit and loss of the company over the 10 year of 10 periods, 10 years. And last we will be presenting the total representation of a data in the Power BI. Next slide. First, company's overview. Company's overview basically covers what the company does and when was it founded, like who is the founder and where is its headquarter, and etc etc. And it also covers information about in which areas the company is performing, and which sectors it all covers, and and what sector it has major major impact, and etc. Here in example we took the company named X, and it was founded in 1966 in the Mumbai. We took its headquarters in Mumbai, and major areas are the sectors which is in with its interest in petrochemical, refining, retail, and telecommunication. Let us consider that it has a global leader in petrochemical refining and operates prominent retail network, and also has a revolutionized telecommunication with its 5G rollout. Recent develop Recent developments includes expanding retail operation and investing in renewable energy. Next, introduction. This is the introduction about our project, which is why we are analyzing this this sector, and what is its profit and loss statement over 10 years, and why the company is outperforming the others and dominating in its own sector. And we will also analyze why the drop in the income is happened in that particular year. And the scope of the analysis focuses on income statements of industries over 2013 to 2023. By examining the decade-long data, we aim to identify trends, evaluate financial performance, and understand how company has navigated various economic conditions. Next, objectives. Why we chose the industries? Why this industry only? It also depends on you, which you can take and analyze about that matters. But why we chose this is diversified sectors, and also it is one of the global leaders among the sectors, and it has much more impact on the Indian economy as compared to others. The company's substantial market presence and recent transformative initiatives such as advancement in telecommunication and investments in renewable energy make it an ideal candidate for detailed financial analysis. Next, objective. This also covers the key insights into the industry financial performances over the past 10 years. By examining trends in revenue, profitability, and expenses, the analysis aims to assess the company's financial health and identify factors driving its performance. This will help in understanding how company has adapted to market change and its overall financial stabilities. Next, my friend Gautam will explain about how we represent data.
Hi sir, myself Gautam. So you can see here there are three different steps through which we have done it. The first step includes the data collection part, and the second part is how we prepare the data, the data which we collected. Then is the data analysis. Next. So, for the first part, that is collection, what we did is we took the income statement of the particular industry from the year 2013 to 2023 using the company's annual reports and industry's official website. And the tool which we used for processing the data which we collected was Excel and Power BI. We've used this Power BI to get advanced visualization and analysis. Next. And in the data preparation part, as you can see, we have converted the balance sheet into profit and loss statement. That is, we have done it through manual process, and this process is usually involved learning and understanding the components of the income statement, even though the profit and loss statements were available. And this hands-on approach helped us grasp the complete structure of financial statements. So sometimes, even though you get the profit and loss statements through the websites or the company's data manual or so on, when we do something manually, we tend to correspond more knowledge. So we have chosen this to do it manually. As you can see, the last part of the manual data entry, we entered the data manually into Excel for around 18 to 20 key parameters covering the last 10 years, so that it could include essential metrics like revenue, expenses, and net income, and so on. And the another step in the data preparation was the transformations and modeling. As I mentioned, we used Power BI. So we imported the data into Power BI, performed initial transformation, and created a dimensional table, that is dim slash table, to maintain the format of the income statement, as Power BI automatically sorts data in alphabetical order. This step ensured that the data presentation aligned with the traditional income statement format. Next. And for the last part, that is the data analysis, we can see that through visualizations, that is, it created interactive charts and visuals in Power BI to analyze trends and patterns in the data. This included revenue growth, profitable matrices, and expense distributions.
Yeah.
Next. So next topic will be explained by my friend Karthik.
Yeah, myself Karthik, and I will continue the remaining parts. So, as my friends explained that how the company will take the how we can analyze the company's profit and loss statement, and based on that how we can compare the revenue year wise and the net profit and net income. Not only this, like we can see the company's fundamentals and technicals, so that we can see the growth of the company based on that. So the revenue which is of a sales and service, and the total income, the all will come under one part. So the cost of material consumed by that sector, and the total expenses, and the from operators how much the revenue will be there, and the company net income, the purchase of the stocks in that trading sessions, and the basic EPS, and the PE ratio, PB ratio, and profit per everything will become under this. So by calculating everything, we can get this revenue and net profit by calculating some formulas that we had done through Excel sheets. So we have taken everything like profit before taxes, profit before expenses, profit of the year, like every revenue from initial amount to the end of the expenditure, how the industry will be go through this path, and they will calculate. So as we compared one company we took, and that company's revenue compared to the last year, it growth by 21.65%. So it's a positive company. So like we took in the year of 21-22, we analysis in 10 years of the data in the 13 to 23 of the year. But in that period, the market was in the sideways. As you can see, this is a sideways of the market. But in this period, the massive growth in 1 year of the revenue compared to the any other year. So this net profit also increased by the 13%. But net income compared to any of the year, the in this year 3% is declined, like 2.76% is declined. So why this decline? We have researched under that also, like why the decline of the net income compared to last year's, and why the revenue got increased by 22%. So like all companies have some reason to grow their profit and revenue, everything. So if by their annual um, profit and loss statement and a balance sheet, we took the data why it has increased, and we analyzed it through the manual excel sheets, and we had come under through the Power BI images. So the final expected output are this, like financial performance insight, like how the financially performance the company is, what is the trend of the company, what is the net income and margins, everything will come under this. And expense management, how the company will manage their expense. Like if one company X company is there, like it has certain some sectors, so how it will manage all sectors expense, and how if the company want to open new sector, it want to invest some amount, so it will reduce the amount from another sector, like not another sector, it will reduce amount from that company. So the expense, how it will manage the highlight that we have analyzed, and we have compared. Next, comparative analysis. So this is year on year we have compared 10 year, we have compared continuously, so that the comparative analysis will be the year on year significance. And we have strategy insights and visualization impact. Finally, the visualization impact will give you all overview of the projects. So in using a Power BI visualize, we have made that year by year what the company is expecting, and what the sectors is giving back to that. And this is the pending work. As you can see in the 2021, we had a revenue drop. In last slide, I has explained that the drop of 3% occurred. Why the revenue drop occurred in that year? So we have investigated that reasons behind that sudden decline in the revenue drop financial year, including potential market distributions and operational challenges or external economics factors. So there will be so many reasons for the revenue drop. We don't know exact reason, but while we are investigating that thing, we got some financial year, like what are the reasons for affecting the revenue drop. So first one is like effect of change in investors, like analyzing how change in inventory levels have impacted the financial statements, and focusing on the effect of the cost of the goods sold and overall profitability. So, and then the profit drop analysis, we did a profit drop analysis of the previous year, because in revenue drop analysis is done by 2021, so we should check the profit drop analysis of the previous year, so how the profit will be in that year. So that we have examined the factors of contributing a decline in a profit during 1920 financial year. So this is a key drives such as increased cost and reduced sales. So the revenue drop in the 2021 will be happen. This is one of the key factor. And we have a dashboard enhancement, improve existing Power BI dashboard to include more compressive visualization, covering additional aspects such as segments wise performance, geographical breakdowns, and detailed cost analysis. So next, this is the visualization of the profit drop analysis. This is a graph. This is an overall graph. It will show the how the profit is dropped in a 1920 year. So overall profit trend. So profit performance review, as you can see, like, and 2021 we have checked the revenue drop analysis. So in profit drop analysis, we have taken the 1920 year. So in that year, profit were blossomed by strong performance across telecom and retail segments. Like in some segments, one X company has some segments, so we check that segments. In that segments, the profit has blossed by strong performance. So, but faced challenges in traditional energy sector. So one sector is booming and another sector is facing some problems. So that is like we should look over all the segments to overview the company. So it will be the main reason. And emerging challenge, so economically indicating pointing towards a slow growth rate with sequ- sequenced profit margin in core sectors, sorry, main sectors. If you see, look over the main sectors, the economic indicators pointing, it will be the slow growth. So the overall profitability will be less, and so the profit trend compared to all sector, it will be declined in that financial year. So another reason is increased cost and operating charges. This infrastructure investment, one of the sector, like uh, a company is coming to the investment or infrastructure investment. So they wanna invest in that infrastructure. So the company required substantial capital to extend its network and service, contributing to increasing operational cost and initial financial settlement. So the operational cost and the operating charges, everything is increased due to this infrastructure investment. So then retail expansion. This expanding retail presence involves significant for upfront costs, while returning were delayed due to market conditions. These are the reasons to drop. And we have market dynamics and financial challenges is also like it is also one reason for the profit analysis drop. We have changes in refining margins and debt management, financial market volatility. We should look over all this so that we can analyze for the further, like once we want to analyze, and after that we should take a step for we can choose that company for our investment or anything we want. Then further thing will be explained by my friend Shashank.
So, hello, sir. Myself Shashank D. So, myself Shashank D. From here, I will be continuing this. The effect of change in inventories, the inventory level and their financial Shashank D. So, I will be
ಎಷ್ಟು ನಿಮಿಷ
continuing from
ಆಯ್ತು ಸರ್?
here. So, myself Shashank, I will be continuing from here. The effect of change in inventories. As we have all already discussed, we have some profit and loss during the years backwards. So, what were the effects that affected the inventory, change in the inventories? The first will be the strategic inventory holdings. The company maintains a large inventory due to its operation in refining and petrochemicals. As we know, we are not actually having a mines of petrol and petrol chemicals. So we invert the petrochemical raw material as a crude oil. So as we are having a crude oil, we should have the refineries. So in refineries, we have the inventories in which we will be maintaining the crude oil as a raw material. So this will be having the impact on financial year. During the period of demand and fluctuation, the balance between the purchase and product becomes crucial. That is when we are having a high demand and we doesn't have any the stock which are maintaining of the crude oil. It may fluctuate the product value and also the demand and the supply cycle. Then comes the cash flow impacts. When we are having high inventories, we have to be tied up with the capital which will be provided through the company. So there will be a more cash flow outward, but there will be less cash flow inward. So this will also affect the change in inventory. This will also affect the financial year of the company. So, and it will operational flexibility. It will affect the operational flexibility, leading to the focus on cash reserves, which we will looking at next stage. Then comes the impact on cost of the goods sold. Uh, when the influence of cost of goods sold due to the market valuations, the company had to manage the inventory by market fluctuation input across cost, which directly influence the cost of goods sold reported in the financial statement. As we know that when we are having high cost, the company has to maintain the inventory when we are having the cost of the raw materials to be low, so that the company can make the more profit when the cost of goods is higher. So this may help us to make some financial benefits. Then comes the marginal pressure. The inventory write downs were necessary when the market prices drop significantly below the cost, impacting the net profit. When we are buying a crude oil or a raw materials from other companies, we should write down the prices, and when the market prices get low, we should also maintain this so that it will, when the cost is below the crude oil which we have purchased, will impact the profit margins of the company. Next comes the strategic inventory management, in which how it comes, how we manage the inventory so that the company will be in profit and it doesn't go for the loss. We adopted technologies such as AI and data analytics to enhance the forecasting accuracy and optimal inventory turnover rates. In this, we will look after the future predicting using the data analytics by using the last year data or the previous data which we are having, so that we can maintain the inventory and we can decide whether the company will be going for profit or loss. Then comes the supply chain innovations. The company worked on the improving logistic and refining demands, forecasting to align inventory and more closely with the market demands. So we are also looking for the supply chain, which will be making through pipelines for nowadays. And in other ways, we can also look after how we can reduce the cost of logistics for supplying of the products and for getting the raw materials. Next. Next comes the ಹಿಂದೂ ಯಾಕೆ ಹೋದೆ ಹಿಂದಕ್ಕೆ ಹೋಗ್ತಿದ್ಯಾ Okay, next comes the revenue drop analysis. Overview of revenue declining. Revenue to the year of 2021. Before the pandemic, the industries experienced steady growth driven by its diverse business segment, including the petrochemicals, refining, telecommunication, and retail. So, as we know, we have faced the pandemic during the year of 2021, which made all the companies to be shut down, and the functionality of the company were affected. So during this, the company was affected of the profit, and it was showed that it was affected as loss. So during this, although including the petrochemical, refinery, and technologies were the major segment of the company, as we know, the petroleum, the movement of the people were reduced. So the petroleum company also used the petrol company has faced the loss. Then comes the pandemic impact. Within the offset of COVID-19, a global economic slowdown was triggered, severely impacting the consumer behavior and industrial activities. As we know, when the COVID-19 was attacked for all over the global, the companies, all the working of the economic of the countries was slowed down, and this triggered the behavior of the consumers and industrial activities. Next. Revenue drop analysis for the year of 2021. The key market distribution and operational challenges. Petrochemical and refining segments. The demand for the transport fuel and the raw materials for the industries, leading to the underutilization of refining and petrochemical capabilities and decreasing the pricing power. As we know, the movement and the transportation during the pandemic was very low. So the use of the petrochemicals and the refined refineries which were done could not be made up for the profit of the company. So it significantly changed the market analysis, and it also helped. It also made the company to lose the revenue. Next comes the retail sector challenges. The stores were closed, and the supply distribution led to the more cost. The transportation of the goods were cost higher, as there was there were essential retail sales, and for other like non-essential retail sales like gold and clothes, this reduced actually the income of the company. Then next comes the external economical factors. The oil market dynamics. The oil price war between the major producers and subsequent prices collapsed, affecting the revenue of the crude oil, renewing the significant business. When the oil market was actually as the war between the major producers and significant price collapses, as the affecting the crude oil. When we are having an intake of crude oil, this affected the price between the intakers and the major producers. So this also affected the business. Broader economic conditions, as the during the pandemic there was no proper transportation of items between the border to border. This also affected the raw material intake from the other countries and from the other borders. This also affected the company's income, and also it may cause the higher prices for the transportation and for making the exchanges. So the overall graph, as we have already discussed, we are using a Power BI technology to analyze the all. So as we can see, the light blue color indicates the year of 2022 to 2023. So like that, we have taken a different color for every year of analysis. We can see in the above. Next comes the graph. In the graph we have taken a single graph or a single candle for different values. So the first comes the value of sales. This candle indicates the value of sales for every year which we have taken. As we can see the example, the value of sale for the year of 13 and 14 was for 40 lakhs and 1200. Next comes the other of year 2014 and 15. Like that, we have taken the different colors for the different years, and we have taken the values of using the Power BI. Next comes the revenues, sales and services which we have made the profit and or which were made the losses. We can see the using the color we have indicated the values for the sales and services revenues which we have taken from the years. Next comes the revenue for operations, the operational cost which we have cost during the every year, how much we have done the operational cost on operating the services, transportation, everything. Next comes the total income. So when we are discussing about the total income, we discuss about actually the profit which you have made. So the total income we have taken in different colors, and as usual we have taken into different stages. Next we come for the cost of material consumed, the amount we have spent on the materials which we are consuming for the services or any production of any materials or products. Next we come for total expenses, uh, leaving the consumption of products. Total expenses comes under the operational cost. Then we transportation, everything, and this was done. So we can see using the Power BI tool, we have done all this, and for different years using the different colors we have done this. So this was what we have done in the all the PPT. We have already first taken the values, we have analyzed, we have made the group, we have separated in Excel sheets. Then we have used the Power BI tool for indicating the power analysis, and also we have analyzed. Okay, and we have analyzed total how the company has made the profit, how it has went the loss, and what the factors affected the company for making the profit and loss. So this was our real topic. So thank you for everyone.